The Federal Reserve held interest rates steady Wednesday for the fifth meeting in a row as two Fed governors dissented, highlighting growing division within the central bank over the economic impact of President Trump's tariffs. Policymakers voted to keep the Fed's benchmark interest rate in the range of 4.25% to 4.5%, continuing the stance held throughout 2025. This comes after a full percentage point rate cut last fall. Fed governors Christopher Waller and Michelle Bowman opposed the decision. Both preferred a quarter-point cut, marking the first time in over 30 years that two governors have dissented on a monetary policy vote. In their statement, Fed officials noted that economic growth has moderated in the first half of the year, a downgrade from the solid growth noted in June. They cited ongoing weakness in net exports and a rush by importers to beat Trump's tariffs as major factors. GDP rebounded to 3% after a 0.5% contraction in the first quarter, but overall, growth remains sluggish. Despite this, the Fed reaffirmed that the labor market remains solid, though inflation is still seen as somewhat elevated. The Fed also noted that uncertainty about the economic outlook remains elevated, a slight shift from their previous stance, which said uncertainty had diminished. This decision once again defies repeated calls from President Trump and White House officials for immediate rate cuts. Trump has consistently demanded a 3-point rate drop, arguing it would reduce debt interest costs and help Americans refinance their homes. Just hours before the decision, Trump posted on Truth Social saying, quote, "Too late, must now lower the rate," while taking aim at Fed Chair Jerome Powell. Powell, who has faced unrelenting pressure from the president, continues to urge caution. He says the Fed must assess how Trump's tariffs could shape inflation and overall economic strength. Markets expect the first rate cut of the year to come in September, during the Fed's meeting on the 16th and 17th. That leaves 2 months for new inflation and employment data to guide the decision, starting with reports due Thursday and Friday. The internal debate is only expected to intensify. Waller has argued since June that tariffs create one-time price shocks, not persistent inflation, and that the Fed should look through them and refocus on jobs. Waller insists his position isn't political, though it does closely mirror the White House view. He remains a leading candidate to replace Powell when the chair's term ends next May. Waller was originally appointed by President Trump. Thanks for watching Finance Spot. If you found this update useful, make sure to like, subscribe, and turn on notifications so you never miss a breakdown of the stories shaping markets and policy. Drop a comment below with your thoughts on the Fed's decision, and we'll see you in the next one.